You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender.
Welcome back.
Welcome back, Todd Halterman. How are you, buddy?
Man, I'm amazing. The sun's out and it's beautiful. Yeah, I got to tell you, who's your favorite character on that old show? Welcome back, Cotter.
Oh, it's got to be Arnold Horshack.
Yeah. Ooh.
Mr. Horshack. Yeah. Mr. Cotter.
I swear he must have been your cousin.
I know. Josh, have you ever seen one of the shows yet? Have you gone back and looked at any of the old ones? No. I can understand that. Hey, let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. National Scrabble Day. Isn't there some game that people are playing right now that's all kinds of about Scrabble or something like that? I have no idea what it is. I see it come across some of our social channels. There's one of them here that I don't even know. I guess I should have gone and looked this up to see how to even pronounce it. Borin Queeners Day. I guess it's something about Puerto Rico, Costa Rica. It's they're all out there in the middle of the water. So Todd, you might know more about that than I do. The sacrifices of the Puerto Rican Regiment of the Voluntary Infantry. Yeah, I don't think we're going there. Let's move right along. Let's see. Thomas Jefferson Day. Okay. Now, I don't know about this one because it says today is Make Lunch Count Day. I do that every day. Like, isn't that like any day that ends in Y? I mean, come on, really? Make lunch count? For some reason, I don't know about you guys. The pictures aren't even showing up on my screen. I don't know what's oh, there it is. Now we can have lunch fun day? Make lunch. Okay, make lunch count. Every day. I live for food. If you're watching us on the social channels, Monday night, we didn't do a broadcast yesterday. I had a speaking engagement. Todd, we got a new restaurant to go to.
Oh, nice.
We went to the old Brea Chop House. Celebrated our 35th anniversary at the old Brea Chop House
Wow.
Guess where 5 points for anybody that tells me where the old Brea Chop House is. Right? Brea, obviously. Just throw that out there.
Yeah.
We had a great meal there. It was tremendous. You don't expect that kind of a restaurant right there in Brea, but met the owner's wife, Danny, or I guess it makes her the owner also. Great meal. So you have to go there hungry because their food, they've got a lot on the menu. So and everything we had was tremendous. Topped off with the carrot cake. Oh, that was great. No, even though today is National Peach Cobbler Day, we enjoyed that. I digress. I'm getting all sidetracked as I talk about the Old Brea Chop House and the great meal we had there. So if you're ever in the area, go visit the Old Brea Chop House. I highly recommend it. Dow Jones Industrial Average up 151 points right now. The S&P 500 up 29. NASDAQ up 200. Ooh, oil up $2.49 a barrel. No, I'm not going to look. 10-year Treasury down 11 basis points today, 266. A lot going on in the world. I'm going to share with you once again, if you are watching the news, and sometimes I just recommend don't. You can get the best news right here on Ron Siegel Radio. So if you watch CNBC in the morning, and again, I recommend you don't. And if you listen to Diana Olick in the morning, and again, I recommend you don't. More bad information. And I have no idea what the motivation is for bad information. But today's broadcast, they're talking about interest rates increasing, which we know that's happening. But they make a comment that first-time home buyers are going to have to expect to pay 7% to get a new home loan. Where the heck is that? Right? Now, I know interest rates are going up, but number one, there is no special and inflated interest rate for first-time home buyers. That's not something that's going on.
You know better than that.
In fact, there are deals available for various types of first-time home buyers. Now, I've told you this before. The best loan on the market, bar none, is the VA loan. There is no better loan out there. And if you are a veteran, number one, first off, I say thank you. But don't let anybody tell you that you should be getting any loan. Now, there might be some instances that for your needs. Now, I talk about, from a lender standpoint, we always talk about eligibility. My friend Todd, he's a financial planner. They talk about suitability. But sometimes they cross over, right? And a lot of lenders, they don't look about suitability. All they care about is, what do you qualify for? What's easy? And, oh, yeah, what do they get paid the most to sell, right? I don't like that idea. My idea is, because I was in the financial services industry, I was licensed with all those fancy licenses back at 20 years ago. And, I learned way back then that it's a lot easier to find somebody that wants to be $500,000 in debt than to find somebody who has wants to save $500,000. A lot easier. So I kind of go where the ease is, right? So people want to be, but I digress. Veterans loan, that VA loan, it is the best loan on the market. If you're a veteran, now we've even shown some of our veteran friends how they can, when they're not right out of the military, but down the road, how do you create income to qualify when you don't necessarily have the right amount of income documented? There are ways to do that within the guidelines. You just have to understand the guidelines. Now, first-time home buyers, if you're a veteran, obviously we know where you're going, because it's going to cost you less for your down payment than it's going to cost you for your down payment for a lease. Why would you lease then? And then we get these folks that tell us, wait a second, I don't want to use up my eligibility. Well, you don't use up your eligibility. It replenishes itself. Sell the property that you're in now, or if you're transferred, if you're moved, if you've got to change a station, right? You can take your eligibility with you and buy another property. Consult somebody that understands the programs. First-time home buyers, FHA, low down payment programs, down payment assistance programs, they're out there. 92% of the land mass of the United States qualifies for the USDA loan, which is a zero down payment loan. Just throw that in there for you as well. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, where are mortgage rates headed? Financial literacy for self-employed folks and getting out of debt. Todd Halterman's going to educate us. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990 or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's take a look at what the markets are doing right now, as we always do at this time. The Dow Jones Industrial Average, if my screen would repopulate, is now up 149 points. The NASDAQ is up 195 points. S&P 500 up 2641. 10-year treasuries are down 6 basis points. And the mortgage bonds, those are up 41 basis points. What does that mean to you? All that good stuff. We can give you all that great data. But until we know what it means to you, that's all that counts. Well, as of yesterday, according to OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. The 30-year conforming interest rate, and I know I've got it around here somewhere, as of April 12th, 5.152. No matter what you hear on the news, no matter what you hear in the marketplace, these are the locked loans from yesterday. 5.152, 15-year conforming, 4.261, 30-year jumbo, 4.677, and the 30-year FHA is 5.028. Now, again, we get the misleading information coming out from various sources. I want to clear up some information for you because we're hearing that, well, mortgages are dropping. Nobody's buying new houses. Nobody's buying houses. Nobody's taking out mortgages. Well, here's some data for you. 2020 and 2021, those were the first years that we actually saw mortgages go over $4 trillion in mortgage volume for those 2 years. Other than that, projected for 2022, 2.6 trillion. Now, yes, that's a drop, but it's the third best number since we've been in the last 20 years or so. So people are still out buying houses, and people are still taking mortgages, even though there's no inventory out there. Just remember that. Then you look and you say, okay, that the inflation, well, inflation is going crazy right now. I'm going to throw a couple of numbers at you that I know the president said it's Putin's inflation. This is Biden inflation, right? Food up 9%. Gasoline up 48%. Used cars up 35%. these are not all issues of coming out of the Ukraine and Russia conflict. I guess it's just Russia that's conflicted because Ukraine doesn't really want to be doing this. It's Russia that's all the agitator. But it all has to do with the policies from the current administration. That's where the problem is. No matter what you have. Now, I'm just going to throw this out there just because I can. Did anybody see? Well, that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. Unbelievable. Did anybody watch? Yeah, Jody, it is, right? Todd's got a great picture. The queen of our team here, Jody, is watching. She likes your piano, Todd.
Yeah.
He could probably send you that picture, Jody. I'm just throwing that out there.
Yeah. I got to figure out how to get it downloaded.
Yeah, I know. You've got Josh can probably show you how to do that. But I digress. So Todd Halterman's with us. He's he's our financial guru. But he fits with me. Todd and I are good friends, and one of the reasons is both of us are odd. So Todd's a financial planner that works with the asset side of the balance sheet, but he knows that in order to help somebody with the asset side of the balance sheet, we have to deal with the liability side. We get more assets to invest if we get rid of some of those liabilities out there. And Todd's got some great programs for that. But before we get into that, Todd, I know we've got 5 days left in the crazy season for you in tax time. So I really appreciate you taking some time to join us. Anything that you've come across this year that's really out of the ordinary that would help our listeners with taxes and that they seem to be missing that they've that we should make sure that we catch on our returns before we file them to minimize our taxes?
The wrinkles really depend on the life cycle that people are in, whether they're younger or older. The younger generations are afraid to use a CPA to help them with their taxes. I'm getting a lot of questions about the economic recovery credits. A lot of people it's unclear on how to claim that recovery credit so you don't pay tax on your stimulus money. That seems to be a big issue. Another issue is how people are contributing to their IRAs. Some people don't benefit from putting it into a traditional IRA, and they should use a Roth. So it's important when you're planning, don't just put money in a tax-deferred account because you've always done it that way. You need to evaluate whether you should be putting it in tax-free.
That's a great conversation because a lot of people don't even think about the idea. And I don't know how much this is even done now, Todd, because I'm not in that world. But there used to be a lot of conversation about converting for strategic purposes, your traditional IRA and moving it over into a Roth IRA. Is that something that's still under consideration for people?
We're doing it a lot right now for folks. And generally, the tax rates are still very low until they get changed on average. And it looks like the average performance a person can see from certain areas of the marketplace are good enough that you can recover your tax money within 2 to 3 tax years in growth and have the rest of your life growing tax-free. So anytime we can keep somebody's average tax rate around 20% or lower, we do try to accomplish that by doing what we call tax bracket surfing.
That's interesting. Okay, so if you're not familiar with tax bracket surfing, well, we're not going to explain it here because you need to call a professional and find out what makes sense for you. That some of these things become, I say a lot of times that because I do a daily radio show, I get a lot of great education. And what that education means to me is I know now that there's something, and the reason I share this for you is I want you to understand the same thing. There is something called tax bracket surfing. I don't understand it completely, but I understand that there are professionals that can help me with that. And think about this concept. I don't know what it costs you to get your taxes done. $200, $300, $400, $500 to get a tax return done by a professional. Just the concept of tax bracket surfing could save you thousands and thousands of dollars And does it make sense to try and figure that out by yourself and do it wrong?
Well,
I was just with somebody yesterday.
Especially if they're in California, if they're not using tax bracket surfing techniques and they're in California, they need to sign up for a 10-minute chat with a pro.
So here's the concept. I had lunch with somebody yesterday, and the conversation was he found the IRS had sent him a correction on his taxes, and it was a relatively small number, and small is relative to every individual. So he said, something, instead of fighting it, I'm just going to pay it. Okay, and I can get that. I don't want to argue with them, and if it's not going to be a major number, I don't want to get into the weeds. Well, 6 months later, he got a tax bill from his state, and the state said, well, your numbers were revised. Now you owe us $6,000 more. $6,000 more. So again, just the word there of get with a professional. They and develop a strategy. And I know, Todd, I wanted you to talk a little bit about this concept is, have a game plan. What's your game plan for retirement, right? And talk a little bit about that consultative process, Todd, and the idea of knowing, hey, am I here for a year? Am I here for 5 years? Am I here for 10 years? Get into that a little bit, if you would.
Yeah, and really it comes down to, Ron, asking people a question of, are they 100% confident about their situation financially for retirement right now, or do they have some doubt? And if you have some doubt is usually caused by debt. And so we've been focusing on helping Americans get that debt gone at the same time of preparing for that day they want to not work anymore. But our program is much like doing tax returns. Some people do their own tax return, and then if they go to an accountant, an accountant will do their tax return a little bit different and probably better. And by the way, the fee for your tax filing is completely deductible off of your return, right off of the top. So you really get a tax deduction by hiring somebody. So my take is, if you're somebody that's in debt and you've been trying to pay extra on bills and your goal is to get out of debt, we have a deal for you. Our actuarial department is willing to put out a free report for folks who want to learn how they can get out of debt using an actuarial scientist to show you how they would pay your bills. And if I could tell you I could help you pay off your bills in 9 years or less without spending any more money than you spend right now, would you want that? 9 years or less without spending any more money than you do right now, by having an actuarial scientist review your situation and tell you how they would apportion your cash flow to pay down and off your bills. The last one we did, it was 8.6 years, and that included the mortgage.
Wow.
So we are changing lives, Ron, by helping people build a playbook for themselves with a free report on how to get out of debt in 9 years or less, guaranteed, without spending any more money than they spend right now, as long as they qualify.
That's pretty amazing. In 8.6 years, including the mortgage. We're going to talk more with Todd Halterman about how do we do it? How do we get the free report? We're going to talk about where mortgage rates are headed and financial literacy for self-employed folks, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Find out exactly what your property value is if you're shopping for a new home. There's going to be some great information right on there as well. And it covers 97% of the country. Homes that are available are right in there. So you can put it, I could be sitting right here I'm actually sitting today in Palm Desert, California. And my MLS does cover this area. CRMLS does cover it, but it doesn't cover Washington. RSR Home Scout does tell you what the property is worth. You just put it in there, say, hey, I want to know what my property value is. Put it in there. It tells you 4 different sources. Now, I'm going to share with you credit unions, right? They have to mark to market all the properties that they own all the time. And what the government says is to market that, they have to go and provide 3 different sources of what the value is of the property. RSR Home Scout shows 4. It'll also give you the list if you want to say, okay, I'm in California and I'm not happy about the new 4-hour work week and I want to get out of California, or 4-day work week. I want to get out of California and I want to go see Todd in Idaho. Well, you can put in an address in Idaho and parameters, and it'll tell you all the properties that are available that meet your parameters. So great tool there for you. Where are mortgage rates headed? There's never been a truer statement regarding forecasting mortgage rates than the one offered last year by Mark Fleming, chief economist at First American. Quote, the fallacy of economic forecasting is don't ever try and forecast interest rates and or more specifically, if you're a real estate economist, mortgage rates, because you'll always invariably be wrong, unquote. Coming into this year, most experts projected mortgage rates would gradually increase and end 2022 in the high 3% range. It's only April, and rates have already blown past those numbers. Freddie Mac announced last week the 30-year fixed-rate mortgage is already at 4.72%. And when you look at our reports, because we just put it on the screen, the Mortgage Market Index tells us that interest rates are not 4.72 as per what Freddie Mac said, but they're at 5.152. Danielle Hale, chief economist at Realtor.com, tweeted on March 31st, quote, continuing on recent trajectory would have mortgage rates hitting 5% with a matter of weeks. So we're already there. 5 days later, on April 5th, the Mortgage News Daily quoted a rate of 5.02%. No one knows how swiftly mortgage rates will rise moving forward. However, at least to this point, they haven't significantly impacted demand. Ali Wolf, chief economist at Zonda, explains, quote, mortgage rates jumped much quicker and much higher than even the most aggressive forecasts called for at the end of last year, and yet housing demand appears to be holding steady, unquote. Through February, home prices, the number of showings, and the number of homes receiving multiple offers all saw a substantial increase. However, much of the spike in mortgage rates occurred in March. We will not know the true impact of the increase in mortgage rates until the March housing numbers become available in early May. Rick Sharga, EVP of Market Intelligence at Adam Data, recently put rising interest rates into context. Quote, historically low mortgage rates and higher wages helped offset rising home prices over the past few years. But as home prices continue to soar and interest rates approach 5% on a 30-year fixed-rate loan, more consumers are going to struggle to find a property they can comfortably afford, unquote. No one knows exactly where rates are headed. The experts do think they'll continue to rise in the months ahead. In the meantime, if you're looking to buy a house, know that rising rates do have an impact. As rates rise, it'll cost you more when you purchase a home. If you're ready to buy, it may make sense to do sooner rather than later. Bottom line, Mark Fleming got it right. forecasting mortgage rates is an impossible task. However, it's probably safe to assume the days of attaining a 3% mortgage rate, gone. The question is whether that will soon be true for 4% rates as well. That's the real-time real estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Continue our conversation. Todd Halterman is with us this morning. We are chatting about debts. And I love this concept, Todd, getting rid of a 30-year mortgage in 8.6 years and not spending any more. You know, Todd, your actuaries do this, and nerds like me do this, but I don't know how many people have actually ever looked at an amortization table. And the interesting thing about an amortization table, and if you're dealing with a great financial planner, that's wonderful. If you're not, give me a call. I'll put you in touch with one. But if you're dealing with a great financial planner, you may be getting a tax refund this year. Take a wild guess. If you can afford it, if your tax refund comes in, and that is the equivalent of 4 mortgage payments. 4 mortgage payments. Take a guess how far that's going to jump you down the amortization table on your mortgage. Anybody? Would the number 10 surprise you? 4 mortgage payments moves you down 10 steps on an amortization table, which means more money is going to your principal every month from that point on, as if 70% of your mortgage of your payment goes, of money goes to your interest. I mean, that's crazy numbers, isn't it, Todd?
It's insane. If the people don't evaluate what their real debt is, their real debt is the amount they owe plus the amount of interest they're going to pay over that debt's lifetime. And a $300,000 mortgage ends up being a $550,000 debt.
That's some staggering numbers. And then you say, well, but I've got a 3.5% mortgage. I don't want to pay it all off. Well, I agree with that concept, is don't pay it off, but set it up properly, that you've got a separate account managed by a professional, call Todd, and have an account on the side that says, I could write a check anytime I want to for $300,000 to pay that off and deal with the arbitrage of it. Is that still something that you're recommending, Todd?
Yeah, the rates, although they're climbing fast, which is taking arbitrage off the table as much, we've done that for years, and it all comes around to what age are you, what other debts do you have, what's your lifestyle, and what other assets do you have that you've got put to work? Are they IRA assets or non-IRA? So there's other things that go into that equation, but I've never seen anybody who got out of debt who was disappointed, especially if they learned how to do it without spending any more money than they spend right now. Why would you not want to get out of debt if you could learn how to do that?
So let me ask you this question, Todd, just from a 30,000-foot level. I know that you can't be specific on these things, but if I'm putting away a significant amount of money into my IRA, and I find that maybe I've overfunded my IRA, am I better off redirecting? Could I be potentially better off redirecting some of that money to get rid of my debts quicker? Or am I better off continuing to put more money into the IRA?
You know, we do that. Part of the analysis that the actuary does is we compare the accumulation and tax benefits of going pre-tax. And then we side by side that by saying, if you reduce what you're putting in pre-tax and you allocate it to debt reduction and tax-free income at retirement, how does that play out for their game? So there are many times, Ron, where we redirect dollars to tax-deferred accounts, to what I'll call debt elimination accounts, that also provide tax-free income at retirement. So the way we build the bank for somebody to get out of debt in 9 years or less without spending any more money than they spend right now is they have a tax-free account that accumulates cash. And once they're done paying debts off, there's residual cash left that's available to live on tax-free income at retirement, Ron. So it becomes a Roth IRA on steroids.
So what ends up happening then? Because, so I get my house paid off, I get my cars paid off. I don't know if it's wise to try and pay off student loan debt because the government may be giving you that money off anyway. So the question then becomes, and my credit card debt. So if I go and I do all of that stuff, I get it all paid off.
Mm-hmm.
Then I need to buy, my car's not going to last for my whole lifetime.
Sure.
What's the plan then? Am I going to go and get back in debt with the car payment again?
Well, Ron, here's the fun part. The average is in 2 years or less, we have most unsecured debt eliminated in our plans when we activate them for folks. So if you think about 2 years or less, we're putting $1,000 or more back into somebody's cash flow because they're not paying credit card or unsecured credit payments, or they're not paying for that automobile that they were paying for because we got it paid off in a couple of years. So the impact is not only is the debt gone and they've lowered their need for cash flow, their income has gone up significantly, Ron. So if they're faced with another car purchase, a family that's saving that money should build their bank account up and make sure they have the cash to get that car and not put a tremendous amount of debt on it. Or if they do, we take that extra cash flow, build the bank up, and we pay that car off in a couple, 2 to 3 years. So they do the same cycle all over again if they don't have the cash to pay for the car.
So here's the fun part, and we don't have any car dealer sponsors, so I don't have to worry too much. But here's the deal: is you go into the car dealer, and you have no debt, so you should have a good credit score. If you don't, we'll help you with that. You should have a great credit score. You go into the car dealership and say, I'm going to put down 25% and work the best pricing that you can get. Take out a loan through the car dealer. Why? Because they get paid when you take out a loan from them, right? The bank pays them. So that will help you negotiate a better price for the car because they're building that into their profit area, and then pay it off in 2 months because you've already got the money set aside because you're following Todd's advice. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, financial literacy for self-employed folks and more with Todd Halterman. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report? It is wrong. What are you doing about it? Credit Sanitizer has the solutions for you. Financial literacy for self-employed folks. When you work for yourself, and while the main tenets of personal finance remain save, spend, invest, and protect, being self-employed comes with a host of different challenges. For instance, you'll need to manage money on an inconsistent income, pay for your own health insurance, and get your head around different retirement savings options. As I near, according to this article, my 8th full year of self-employment. I think I've always been self-employed. Now I think the laws don't allow me to be, but understand the importance of a buffer fund, because Freelancing is prone to feast or famine cycles and in turn inconsistent income. You want to have a buffer fund to tide you over during those lean months. What's the difference between a buffer fund versus a rainy day fund? Rainy day fund or emergency fund is intended for true emergencies. A buffer fund is money you can tap into to cover living expenses if you're experiencing a gap in cash flow. I'm going to share with you what I've done for years. All money goes into one account, savings account. Take and work on your budget and pull a salary out of that savings account so it's the same every single month. That way it gets rid of those peaks and valleys, and then you should have some money left over at the end of the year. Know your tax responsibility. When you work for yourself, you'll need to pay your own self-employment tax, or FICA, Federal Insurance Contributions Act, which is made up of Social Security and Medicare taxes. The current rate for 2022 is 15.3%.
Ow!
Which is 12.4 Social Security, 2.9 Medicare. When you work for someone else, your employer pays half of those taxes while you're responsible for the remaining half. But when you're self-employed, you get all of it. Besides self-employment tax, you're also responsible for paying quarterly taxes. Fun. Chances are you won't need to tap into that entire savings to pay Uncle Sam. Create a business budget. You got to do it. Think of health insurance as multi-pronged. So long-term disability insurance, you need to have that because you're the one, the self-employed, and you've got the home, the health savings accounts are always another big issue. Obviously, you want to talk to your financial planner to explore retirement options, IRA, SEP IRA, solo 401k. All of those things are plans that are out there, and I don't know if they're right for you. I don't know which one is right for you. But the whole idea is to talk to a professional and get a financial plan. And I know that there are services out there that say, well, you can get a financial plan for free. Probably worth exactly what you paid for it. Just throw that out there. Because, you know, I listen to radio commercials. I should tell you, that's the Your Credit Matters segment brought to you by creditsanitizer.com. I listen to radio commercials and I hear them say, you know, you can do this and it's going to save you this amount of money. Well, that's a limiting statement. Give you an example. Real estate. You go and buy a house, and I'm going to use a number of 5%. So and I don't know whether you can find this or not. I'm not a realtor. You're buying you're selling a $500,000 house, and say the commission is 5%, 6%, 7%, whatever it is. I say the higher the better. I'll tell you why. So 5%, that's $25,000. Now, if a realtor would do it for free, the best you could hope for is to save $25,000. Now, what if you pay 5% and it costs you that $25,000, and the realtor can get you an extra $50,000 on the sale price? So now you're getting $550,000. You're way better off, right? Because you're only paying them a percentage, and they're not going to do it for free. And if they're doing it as a cut rate agent or tax professional or financial planner, they're all the same in this concept. If they're doing it for nothing or they're doing it for a flat rate, basically what they're saying is, let me get done with you so I can get to the next one so I can make more money for my family. Now, if you're paying a percentage, the motivation of that professional is to help you make more because that's how they make more for their family as well. Todd, I know you're doing all kinds of financial planning and helping people. Am I missing something there?
No, I think that, you know, it's natural human nature to want to get something for at no cost. But you're right. Usually if somebody's going to do a full-blown financial analysis for you, that's because they want a chance to sell you something rather than help you solve your puzzle or begin with the end in mind. And at our firm, really simple. It takes 2 to 3 hours to turn around a stress test. We simply just tell folks we just need to cover the time our staff takes to enter the information in. But we're glad to do that for folks. But on the debt analysis, we believe so deeply in getting people out of debt. We do the debt analysis at no cost to get them that free report.
But the bottom line is that the report is going to be free with the idea that if it makes sense for somebody, it's going to cost them a little bit of money. Is that correct?
Yeah, and yes, the essence is there is a cost to the program if we can qualify them, but the cost is actually paid from the trust company to us that we use to help build the bank account that pays off their debts. So we've even arranged that we get the trust company to pay our compensation and our time to develop it, because the trust company benefits economically for the deposits that we make to hold the money while we're waiting to pay it off.
So it really goes back to the same thing that I was saying is you're getting great advice because somebody's paying for that advice, right?
Correct.
It's not that it's out there just saying, okay, we're going to do it for free, which is always a scam, right? It's in my opinion, right? When somebody says it's free, it means it's hidden. It's just the way I look at it.
There's no free lunch in America.
Right. Or like what you just said, it's not hidden, it's disclosed now. Correct. So it's not that it's a free lunch, it's disclosed that somebody's paying for it. It's being paid for by the trust company because the trust company knows that they're going to have a economic benefit as well. And everybody's able to then come out on the winning side. So how do you, I mean, I know that we have our service, rsrnodebt.com, rsrnodebt.com. You can go right there and actually just fill out the forms, the paperwork, and Todd's team can then take it the next step and show you how you may or may not qualify. We don't know. But to give you an idea on the whole process of what it's going to look like, I've got to find the link for you because I know rsrrapidpayoff.com, rsrrapidpayoff.com. So we actually did an analysis for somebody and showed how it would work for them. RSR Rapid Payoff. And again, like as Todd said, it's just a matter of reallocating and understanding maybe if we pay our debts a different way, we might be able to benefit. Not saying you got to pay more. And just want to confirm, Todd, when you're talking about paying off debts in a couple of years, you're not talking about that scam where they send you the money and don't pay anybody until there's enough money to negotiate a lower payment. That's not the process you guys are going through, is it?
Not at all. We set up an account that allows them to accumulate tax-free interest and take tax-free withdrawals. And that tax-free benefit helps them to grow their money faster. And when they use it to pay off debt, they're not contributing to their tax liabilities trying to pay off debt, which means they've got to save even more. It's the most efficient thing I've seen in 25 years I've been doing this. These actuaries have it figured out.
So if you are if you're thinking about doing something like this and you get a call from somebody and they say, well, pay us. Now here's the scam that they do. And I'm going to tell you right out because, you know, I frequently I'll ask somebody a question. Obviously, Ron Siegel Radio, I do some vetting. Our team vets people. Todd and I have been friends a long time, so I knew the answer to the question before I asked him. Here's the scam. So what they do is they say, you've got $10,000 in debt. We know that from our history, they say, that they're going to be able to settle it for 30 cents on the dollar. Start sending us the money. And, oh, by the way, we get paid first. And they're going to then go to your first creditor after they've collected enough money from you and they've told you to stop paying your creditors. I don't ever say that to you. We want you to pay your creditors. And then they say, go to the first creditor and they say, we've got enough money. We can pay you 20 cents on the dollar. And if that creditor says no, then they go to the next one and say, we'll pay you 25 cents on the dollar or 20 cents. Until they find somebody that'll do it. Well, all that time, your credit is getting damaged. You're getting harassing phone calls. You're getting threats. You're getting lawsuits, maybe. Not the way you want to do things. So if you get a call from somebody and that's the process they're offering you, run, don't walk. It's not what Todd is sharing with you. Todd's sharing with you a legitimate way to get out of debt by paying your bills strategically and understanding how the actuary tables work to get out of debt quickly. Am I hitting that one, Todd?
You're 100% right. There's no magic formula here. It really is having an actuarial scientist help folks to understand the best way to build their payment schedule on their bills, their savings. These guys have doctors in science and mathematics, and it just always impresses me how they can just move pieces on a piece of paper and it makes that much difference.
Fascinating, and most of us don't know how to move those pieces on the paper. So why wouldn't we? Think about this: if you could pay off 30 years worth of debt in 9 or 10 years, you're saving tens, maybe hundreds of thousands of dollars. If you want to know how to do it, if it'll work for you, I don't know if it's going to work for you. Give us a call, 800-306-1990. A consultation with Todd will make that clear for you, whether it's right for you, your family, and is it worth 10 minutes of your time? Just throw that out there for you. As always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean and Lovin, who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.